When it comes to the markets, what exactly is giving them their cue? Is it monetary policy? Is it elections? Is it just the kind of the repricing of assets?
I think it's turned into fears about global growth. I mean, I think that's been, with this sell-off initially was really a kind of momentum unwind. I think there's some debate about whether it was real yields that triggered it or something else. But I think that when you look now at the internals of this, we've seen growth outside the US slowing for some time now, basically all year in Europe, particularly in China. We were just talking. I still think the market is underappreciating the extent to which China has slowed. You're seeing that in the fact that not just Chinese assets, but also developed market assets exposed to China underperforming pretty dramatically over the last month or so. And now I think the concerns now throwing forward to the fact that the US has been the main driver of global growth all year, driven by this fiscal stimulus, driven by a strong capex impulse. I think the concern that we have is that both of those things may now be peaking or behind us.
OK, does it mean that we see a repricing in Treasuries?
Yes, so we have been adding to duration, taking advantage of yields well above 3%. I think that it's very difficult for them to continue rising when you have global growth falling. I think we also had the first hint last week in the Vice Chair Clarida's speech about the Fed starting to think about testing neutral and starting to toy with some communication around a slightly less aggressive path of hikes. So, yes, I think global growth concerns should support Treasuries.